So let's begin MTP1 November 2024 related exams. So we'll solve first MCQs and then descriptive. As we know, the paper is generally for 120 marks. 30 marks is for MCQ, where they will give 15 MCQs of 2 marks each, where you'll get 30 marks. Getting it? Then 90 marks of the paper is descriptive, where you have to write 70 marks. Where this 90 marks is given in the form of 6 questions. 14 5s are 70, and another 14 marks question. Inside that 4 marks additional question will be given. Some 2 marks question choice will be given among the 5 questions. So out of total 6, any 5 you have to write. 5 into 14 is equal to 70. Getting it? Now you can write all the 6 questions also. Top 5 questions with highest marks will be selected for awarding the marks. Next, Mr. Rajan, the CEO of a mid-sized company, has received an email requesting him to urgently update his account details due to a supposed security breach. This is a digital audit question, but easy to understand. The said email appears to be received from company's bank accounts. The said email appears to be received from company's bank accounts, looks official due to use of bank's logo, branding, all that. It looks like exactly like a HDFC bank mail, ICICI bank mail. Such email also includes a link to a website that resembles the bank's login page. Concerned about security of the company finances, Rajan clicks on the link and enters his login credentials. Later, the company IT system detects unauthorized access to the company final financial accounts and identifies that CEO credentials were compromised. Identify this cyber attack, phishing, that's called. Yeah, phishing attack. Phishing attack is through mails. Phishing attack is through voice. Phone call they will call and pretend that they are bank persons, all that. Whaling and smishing is targeting employees like that. Understood? We have all these words in our digital audit. In digital audit, they discuss about what is smishing, what is whaling, what is phishing, all that. Next, understood all of you? So the answer is what? Phishing. See, phishing, no, this comes from the word fishing, where they give a bite to grab the fish. Getting it? Yeah. So if at all the attack is through email, then that's called as what? Phishing. If the attack is to phone call, then it's called as phishing. Anyhow, I will explain this in digital audit. Then DFL Limited has invited tenders for appointment of statutory auditors. As Messrs Cross, let us see the time within which we are solving MCQ with analysis. Getting it? So 30 marks means 30 into 1.8 minute. For every 1 mark, you're having 1.8 minute is the time, technically speaking. Okay, 30 into 1.8 means it is 54 minutes. Correct? 54 minutes is the time that you're having to attempt 30 marks paper. Correct? We'll see within what time we can finish it off. Anyhow, recording started, right? So we can see. DFL Limited has invited tenders for appointment of stat auditors as Messrs Cross Limited. Okay, the previous auditor has retired due to completion of terms of engagement. Okay. The tender is exclusively for chartered accountants. Okay. Invited tenders for appointment of stat auditors as, okay, fine. Messrs SDS and Co has submitted its tender quoting the fees for audit assignment considering the size and nature of the business. The contract was awarded to SDS and Co and they were appointed as stat auditors for 3 years from the year 23-24. Whether SDS and Co will be held guilty. Now you see, if any work is, if a work is not exclusively reserved for CS, can a CA respond to it? Yes, provided minimum fees is already quoted. Suppose if a work is exclusively reserved for CS, here it is statutory audit, right? Here it is statutory audit, right? So when a work is exclusively reserved for CS, they can respond to the tender. They can respond or they cannot respond? They cannot respond. Just a minute. I explained you so detailedly that day. Now I forgot. Just a minute. Tenders related provision. See, let us do a back, like what? Mind mapping once again. If you forget suddenly in exam, don't stress. Don't panic. Do this analysis. Tenders. Can a CA respond to a tender? Yes, he can respond if the work is not exclusively reserved to CA and or work is exclusively reserved to CA but minimum fees is quoted. Suppose if a work is exclusively given to CA, you can respond to it provided fees is already determined. There is no threat to independence. You can't influence the client with fees because fees is already fixed. So these are the two cases. One, fees is not exclusive to CS. Service is not exclusive to CS. That you can happily render. Anybody can, tender to it. You can also tender to it. You can quote your fees, all that. Suppose if a work is something that only CS can do, you can respond to such a kind of tender only if a fees is predetermined. Negotiation for fees should not be there if at all work is already reserved to CA. Correct? Now here, appointment of stat auditor means what? Fees is only exclusive reserved for CAs, which means you can respond only if fees is already decided. But here you are quoting the fees. Guilty. You are treated as what? Guilty. Which clause? Clause number 6, part number 1, schedule number 1. You see how I did mind mapping? You're getting it? Actually, I forgot. I didn't remember. But little bit stress if you take, you can get back to it. Now the answer is yes, it is treated as guilty. Yes, clause number 6, part number 1. Yes, it is treated as guilty of professionals. Sometimes no, don't directly clause 6, part 1 immediately put this. Here they would have treated as other misconduct. Observe, read entire sentence, conclude that it is 100% concretely correct, then only put. And another option, they will give professional correctly the same. Clause 6, part 1, schedule 1, they will give everything. Just that one word they will change. So don't get tempted. Read entire that sentence. This is correct. Remaining also once you see, no, the answer is not correct. Yes, okay. Clause number 7, not correct. Yeah, no. Clause number 7, no. So the answer is between two yes. So the answer is between clause 6 and clause 7. Now whether you need to see. So answer is A. Yes or no. In MTP, they have given answer as B, which is wrong. In MTP, the answer is given as B, which is wrong. For which I have even, there is a specific document on this. Tender guidelines, there is a guidance note. There is a guidance note on tender guidelines. Inside that, this point specifically they clarified with a question. Getting it? So in that, there is a question number 4, I guess. Question number 4, which specifically answered FAQs on tender guidelines. That's an FAQ document. On that, question number 4 is there. There clearly is said if a work is exclusively reserved for CAs, CA can respond only if minimum fees is already predetermined. Whereas here, he responded, the firm has submitted its tender quoting the fee. Means the firm has quoted the fee. That's wrong. You should not, because the work is exclusively reserved for statutory auditors. Stat auditors means what? Only work is exclusive for CS. So this answer is wrong. The right answer is what? A. Understood? Pihu and Associates or stat auditors of Brick Limited for the year 23-24. During the audit, Arpit, the engagement partner, noticed the following. Okay, what he noticed? Notices received from various regulatory authorities, payment of fines and penalties, unusual cash payments, payments to various governments were not supported by document, SA 250, indicators of non-compliance with laws and regulations. Yes or no? Last question in our book, 250. Indicators of non-compliance with laws and regulations, heavy payments to legal counsel, all these are various indicators of non-compliance. See, Arpit should consider the above as an indicator of doubts of non-compliance with laws by Bricks Limited. It's not doubt on accounting, it's not doubt on going concern, it's not doubt on account internal, it's a doubt on non-compliance. The answer is B. Correct? It's an SA 250. Then case scenario. MNO Limited, incorporated in the year 1980-81, is a distinguished company specialized in manufacturing of nickel-based batteries. As one of the oldest manufacturing company in this sector, just a minute. As one of the oldest manufacturing company in this sector, MNO Limited operates with 2 manufacturing plants and a comprehensive distribution network that spans across India. Okay, they're manufacturing batteries. They have across India the distribution channel. Remarkably, MNO Limited was among the first companies to be listed on stock exchange, underscoring its long-standing presence in the market. The company has consistently adhered to SEBI regulations, ensuring compliance with all the regulatory standards. Now, KB and Co., they were statutory auditors in the previous year and resigned from the role of stat auditor. JKL and Co. has been appointed as a stat auditor of MNO Limited in the year 23-24. So, existing auditors resigned, new auditors JKL and Co. have taken up the role. In conducting initial audit engagement, JKL and Co. simply placed reliance on the closing balance of the preceding period. No, JKL and Co. has to verify, has to obtain sufficient appropriate evidence whether opening balances are free from material misstatement. For that, you may have to do some specific audit procedures and all. During the audit, the auditor observed that the company is unable to pay its creditors on time. The company is also not able to properly comply with terms of loan agreement with banks, inability to pay creditors on time, unable to comply with loan agreements. These are all financial indicators that may cast a significant doubt on entity's ability to continue as a going concern. Financial indicators. Several key ratios are also adverse. Adverse key ratio, financial indicator. In view of the above, the auditor asked management to provide assessment of going concern. However, the management did not provide the same. Despite following up, management did not provide requested assessment. You will give modified opinion. If management does not extend going concern assessment to at least 12 months or required period, or does not conduct assessment, the auditor will give a modified opinion. Correct? As a result, the auditor documented the request and follow-up regarding going concern assessment in the working papers. Apart from the above, the company has one accounting software for maintaining its books of accounts, which does not have a feature of audit trial. Accordingly, the auditor reported the set fact of not having audit trial under other legal and reporting requirements in the main audit report, which is correct. The auditor has reported that the company is not having facility of audit law. He qualified. Apart from the above fact, the several important financial information is as below. Paid up capital 10 crore, deficit balance means this is a negative balance. Correct? 11.47 crore, turnover is 85 crore, inventory 15 crore. There is a star mark. Inventory amounting to 12.35 crore are lying with third party, means substantial portion of inventory. Yes or no? Substantial portion of inventory is lying with third party. And there is a cash loss 2.95 crore. Cash loss means what? In Caro we need to report cash loss. Yes or no? Operating loss how much? 1.97. This is not required to be reported. In Caro we need to report this 2.95. Next, as per requirement of 570, how auditors should deal in the matter of unwillingness of the management to provide assessment relating to going concern. Straight away modify. Auditor should report matter in key audit matter. No. The auditor should properly document evidence regarding. No. The auditor should report an emphasis. No. The auditor should express a modified opinion. Yes or no? The answer is D. Easy or not? Next, as per SA 501, what is the correct audit procedure to be followed regarding existence and condition of inventory where the inventory is lying with the third party? What procedure? Should rely on the management explanation? No. Auditor should request confirmation from third party. Correct. As to quantity and condition of inventory held with them, or perform inspection or other procedures as appropriate by appointing other auditor or by getting a service auditor report. Remember? Yes. So the answer is B. Right now, let us see remaining options also. The auditor should verify inventory lying with the company. No. The auditor should take return. No. The answer is B. Easy or not? State the amount required to be reported by auditor under clause number 17 of para 3 of Caro on account of losses during the year. Cash loss is how much? 2.95. So 2.95 has to be reported. Correct? Here they said on account of losses during the year. The clause number 17, that is dealing with clause number 17, 2.95 crore. According to 510, which of the following audit procedure can be implemented by JKL to obtain sufficient appropriate evidence regarding opening balance about whether it contained material in statement? Now, what is the audit procedure for opening balances? Ensure that closing balance of prior period have been correctly brought forward. Correct? Perform specific procedures to obtain evidence regarding opening balance. Specific procedure means what? Trial balance comparison with audited balance sheet. Correct? Determine whether opening balance reflect accounting policies that are appropriate. Correct? No. All the three. The answer is 1, 2, 3. Correct? So the answer is D. Are you clear? Next, case scenario 2. I'm proceeding. EFG Limited, incorporated in 1984 and 85, has distinguished itself as one of the most rapidly growing NBFC having principal business of granting loans. So the NBFC main business is what? Giving loans. Its head office is situated in Pune, a city renowned for its dynamic financial and industrial sector. Remarkably, the company holds the notable achievement of being amongst the first NBFC to be listed on stock exchange, which underscores its long outstanding influence and presence in the financial market. Over the years, the company has demonstrated unwavering commitment to regulatory compliance by constantly adhering to SEBI listing obligations and disclosure requirements. Pakka, this is a Gemini question or chat GPT question only. This one and above one, all these are Pakka chat GPT, AI based questions, AI generated questions only. So which means no matter you solve 1000 MCQs, doesn't matter, because every time AI generates, every day AI changes. Remember, every day depending upon the search engine, depending upon what you are searching, people are searching across the world, AI will improve every day. So every day, whenever you generate an example on one particular topic, it will give a new question. So that's why I always tell, it's not how many questions you practice, it's all how much command you have on the concepts. Getting it? So SEBI, this steadfast adherence ensures that all its operations align with rigorous standards set by regulatory, thereby reinforcing credibility. Until now, positive only everything. Messrs. SDC & Co. thoroughly obtained the knowledge and background of the company, including an understanding of the legal and regulatory framework. Very good. During the audit of the financials, the auditor observed that now here the issue starts. The company has violated one of the prudential guidelines of RBI as applicable to the company relating to acceptance of public deposit. Since the company was a non-deposit taking, a non-deposit taking cannot accept deposit. In one of the case during the year under consideration, the company had accepted the public deposit. In this regard, the management has also provided a detailed note in the financials. Okay, they gave a detailed declaration in the financials and subsequently also repaid the said deposit in the next year. Okay, they mentioned that they violated everything. Honestly, they mentioned the financial statements and they repaid later on, they rectified it. Considering the said note, the auditor feels that the matter is important and required attention of the users in the financials. Emphasis of matter paragraph. Correct? The auditor of EFG Limited sent confirmation request to 14 debtors to whom loan has been granted to confirm the year-end balances as per 505. The said requests were designed in such a way that debtors will directly respond to auditor only when they disagree. That's a negative confirmation request. Correct? Now, based on the above following, considering the nature of the business, what is the nature of business? Principal activity of lending loans. Which reporting clauses under CARO would be applicable from the below? Obviously, whether the company is conducting any NBFC activity without a valid certificate of registration, yes, we need to report this in under clause number 16 of the CARO for sure. In respect of loans and advances in the nature of loans, whether the schedule of repayment of principal and repayment of has been stipulated, whether the repayment receipts are regular, under clause number 3 we need to report. But clause number 3 is not applicable for a company which is engaged in principal activity of giving loans. You see clause number 3, we have given a disclosure there. You open clause number 3. You open clause number 3 in CARO, just open straight away. I'll show you by it straight away. You open CARO, clause number 3, starting paragraph. Under clause number 3, starting paragraph, bracket 1 point is there, you see. Not applicable to a company whose principal business is lending money or investing to give loans. For them, clause number 3 does not apply. For NBFCs, clause number 3 does not apply. This need not be reported. Correct? Understood? Whether the company is required to be registered under 45 IA. Yeah, this is 16th clause, first subclause. Whether a company has provided any loans, guarantee or security to any other entity. This is again clause number 3 or 4. That is not applicable to company whose principal business is this one. Are you clear? All of you? Wait a minute. Whether company has provided any loans, guarantee or provided any security to any other entity. Clause number 4, you see. Whether entity has provided, whether the company has provided any loans, guarantee or provided security to other entity. This is clause number 3 only, sorry. Clause number 3 only this is. Inside clause number 3. But this third clause is not applicable to company whose principal business is to give loans. Fourth clause, can you read once fourth clause beginning? Fine, that's it, which means 1 and 3 only the answer. What should be reported under CARO? 1 and 3, correct? 1 and 3, the answer is A, but in the answer they gave B option, that is wrong. Understood? But in the answers to the MTP they gave B answer, which is wrong, that's not correct, because clause number, this particular reporting will not apply. Correct only? 8th question, what answer they gave? B they gave, that's wrong. Understood? That's wrong. See, always answer is there only to check your logic. Based on answer, you should not develop your logic. You're getting my point? Yeah. Next. For me, I will also check answers, but to check whether my analysis is correct or not. If at all answer is contradicting, then I will think very deep why my analysis is wrong. Getting it? So that's it. MTPs, generally it is possible that answers will be wrong sometimes. Even in main exam also answers will be wrong. Even if you put right answer correctly, we don't know exactly what answer they gave. That risk is there, inherent risk in audit subject. Yes or no? Next. What is the auditor responsibility when the EFG Limited for the previous year has not conducted by current auditor? Oh, what if previous year audit is not done by the same auditor? The auditor needs to report that matter in other matter paragraph, correct? No. The auditor need to such matter? No. The auditor shall be responsible for obtaining sufficient appropriate evidence that then, this is correct. 1 and 2, initial audit engagement, you must get evidence like this. Option is 1 and 3. A, option is A, correct? Next. In the given case, what is the reporting requirements in relation to 250 on the part of the auditor with reference to violating guidelines by company relating to acceptance of public deposits? Highlight emphasis of matter paragraph. Yes or no? The auditor is required to report the matter in the main audit report under other matter paragraph. No. The auditor is required to report the matter in main audit report under emphasis of matter paragraph section only. Yeah, that is correct only. Apart from reporting under EVOMP, the audit should also require report. Yeah, this is even more correct because NBFC exception report you need to file with RBI. Non-compliances with RBI Act, non-compliance with RBI directions, systematically important non-investment. Remember, wherever there is a non-compliance with any of the provisions, if a company has accepted deposits which is not supposed to do so, that's a non-compliance with RBI guidelines, that has to be reported as no exception report. Remember, so C answer is more correct. Are you clear? Apart from EOMP means EOMP you will do, and you will also report to RBI. Apart from OMP, no, it's not OMP because the company highlighted the same in the financial statement. So when financial statements highlighting that non-compliance, what you do better, you highlight that non-compliance. Emphasis of matter paragraph is the one where you can highlight. Clear? Next. C.A. Ram and Lakshman are close friends and are into practice as sole proprietors. Both decided to expand their focus on taking up more assignments in the field of GST. On back of the same, they both decided to conduct a joint training session for their clients on GST and decided to share the total fee collected thereof. They can do. CS can conduct a joint training session for their clients and charge some fees and collect. Nothing wrong for their clients only. You should not do for general public. They invited another CA from their professional circle to join the initiative. However, the person declined the same, informing that this act was against professional ethics and lead to disciplinary. The other CA was wrong. You can conduct joint training sessions. This point is there in clause number 6. Clause number 6 is there as an example. Conducting joint training sessions. I think we have seen even a practical question on this. Even in ethical standard board guidelines were there, no, which I taken from ICS study material. Remember, ICS study material I've taken ethical standard board some suggestions. I think inside that also something like this is there. Clear? The partner of Messrs. AK Associates is a close friend of Ram. The firm was involved in an audit of listed company which was required to submit business responsibility and sustainability report. Okay, so the partner of AK Associate is a close friend of Ram. It means the firm, we are actually talking about these two people. Getting it? And for them, no, there is a partner of some different firm. He's a close friend of the first person. The firm was involved in audit of listed company which was required to submit BR. Which firm? AK and Associate is involved in BRS reporting. The company being audited was into thermal energy production business in India. They had submitted details about total emissions from its production outlets during the year. Total emission submission is a essential indicator. How much emissions that were there? Essential indicator. And a detailed energy consumption plan which it has devised for upcoming years. This is a leadership indicator. Correct? Essential indicator is about the past generally. Leadership indicator is about the future plan of action. Correct? Since C.A. Ram has undergone a course on sustainability reporting, he was approached for getting advice on what needs to be done in BRSR for the company. By the way, since it's environment related energy consumption, which principle? Principle number 6. Correct? Environment, principle number 6. We have seen Tata Motors, how much energy they consume and all that. And we have seen leadership indicators, what plans they are going to establish. As a gesture for helping, partner of the firm suggested C.A. Ram name to the post of becoming a member in board of management of KYC Cooperative Bank, a primer urban cooperative bank, and a client of, also for a client of AK and Associates. Upon hearing the same, C.A. Lakshman requested Ram not to take up as it lead to professional misconduct. See, for the firm AK and Associates, no, upon their recommendation, Ram is accepting board of management in cooperative society, primary urban cooperative bank. Yeah, he can accept. What he can do, he can accept it. Absolutely, he can accept. Then, in addition to that, he is also giving advice on BRSR. That can be done. Cooperative urban bank, no. Can you accept a board of management position in a cooperative urban bank? Yes. This we have seen in ethical standard board recent decisions in ICA study material directly. Inside the decisions we have there. So many points were there. At last we have seen in ethics. So inside that this point will be there. Are you getting it? Not just urban, even for rural also you can take up. Not an issue. For a cooperative bank, you can be taking up a position of board of management. CA Ram was acting as an internal auditor of PL Technologies Private Limited. The company decided to raise more funds for expanding. What case study? So much. CA Ram was acting as internal auditor of PL Technologies Limited. The company decided to raise more funds for expanding business across the country by including new age technological services such as artificial intelligence. Okay. Ram was observing the business model and the way in which business was operating for quite some time, and he was keen on investing in the company. As a result, he decided to invest in the company shares and ended up acquiring 9.75% of the shares of the company. Remember, he is an internal auditor. For internal auditor, there is no restriction. Yes or no? Is there any restriction for the internal auditor to acquire any shares of a company? Nothing such. But still, self-interest threat is there for the internal auditor. That alone he has to observe. But since it's a non-statutory assignment, there is no legal bar on the internal auditor. Correct? Ram was acting as internal auditor of PL. You see, an internal auditor acquired 9.75% of the shares, which was like 4.75 lakh. CL Lakshman got to know about this information and he immediately urged Ram to resign from being internal auditor of PL Technologies for the reason that internal auditor cannot hold any shares in the company and it will lead to professional misconduct and also failure to comply with the Companies Act. That number also wrong, 1949, 2013. However, Ram did not accept the argument of Lakshman and said that nothing will happen because he is acquiring 9.75 and continue to act as an internal. That is correct only. He can argue like that, no problem. Amma, still it is there. CA Lakshman was stat auditor of GH Finance Limited, an NBFC headquartered in India. The company treasury department has undergone changes in the recent past and current set of team members did not have much experience in handling treasury functions. Due to this situation, the company reached out to their auditors CA Lakshman, who was also into equity research advisory apart from CA practice, to support the company and the members of its treasury department for a brief period by giving investment advisory services. A CA can be an equity researcher and advisor to his clients and relatives, no problem. Yes or no? But he cannot run portfolio management service. He should not run a PMS services, such service he should not. He can be equity research advisor. This is also there in ethical standard board, guidelines, ethical standard board recent decisions like that we discussed in from ICA study material, the last of the ethics chapter. Yes or no? To ensure effective utilization, management of the funds of the company. Before committing anything on the offer, CA Lakshman wanted to consult Ram as to whether the services by NBFC can be performed. So both of them are discussing whenever they are getting some works. Now the actual question. Whether the act of conducting joint training session on GST by Ram and Lakshman and sharing the fees collected, will it lead to professional misconduct? Yes, no. The answer is no. The answer is straight away D. No need to read the answer also because it is straight away not a professional misconduct because remaining three answers start with yes. Directly these answers are wrong. So the answer is D. Are you clear? All of you. As per recent ethical standards board, it is permissible for 2 or more CS to practice collectively to have a joint training session for their clients on GST and share the fees collected thereof. With regard to BRSR, with regard to BRSR reporting on date of total emissions and the future energy consumption plans of the company, how do you treat them? With regard to BRSR reporting on total data emissions and the future energy consumption, how do you treat them? Okay, BRSR total, the details of emissions forms part of essential indicator and need to be mandatorily disclosed. Correct. However, the plan for future energy consumption is only a leadership indicator and is considered as optional disclosure. The answer is A, correct. Understood? About future plan is only a leadership indicator. How much you consumed is an essential indicator. Both of them are mandatory. That's wrong. The details of emission are leadership. That's wrong. The details of emission and future both are leadership. That's wrong. Details of emission, that's why I showed Tata Motors report to make you better understand about these kind of. See, if at all we have not seen Tata Motors, we will not be answering this. If at all you read only from the book, you can't figure out what is essential indicator, what is, because in the book they didn't give like that. They just said at the first place the principles have to be indicated in 2 ways, essential and leader, and conceptual part only discussed below. What amounts to essential indicator, what amounts to leadership indicator under each principle, they didn't give. They didn't give that notes, but they're asking practical question. That's why whenever we are reading, always we should read practically. We should understand what exactly they're trying to tell. I figured out this answer easily because I've seen Tata Motors BRSR report. Getting it? Next. The futuristic plan which the company has for its energy consumption can be categorized under which principle of national guidelines? Which principle? Environment na? Principle number 6. Correct? So the answer is B. Here the answer is A. By accepting the offer to become a member of board of management of KYC cooperative bank, do you think Ram would be held guilty? The answer is yes is not an answer. Yeah, it is permissible for CA in practice to become member of primary. No, he has become an urban. No. So it is urban. It is permissible for CA to become a member of board of management in primary urban cooperative bank. Hence CA Ram would not be guilty. We'll see option D also. Yes, no, that's wrong. So answer is C. Clear or not? All of you. He can become. Yes, it is permissible for CA in practice to become a member of board of management in primary urban cooperative bank. Here also he became board of management in urban bank only. So you can directly select this answer because he became an urban bank only. In the question also urban it is there. Here also urban is their answer. So straight away it is matching. Now some students might give, what about this answer? No need to check because it is said rural. In the question given is urban. Huh? Even if it is rural, then you should select B answer. That's it. Sorry. CA would be held as guilty. That's wrong. For rural also you can have. For rural also you can have, you can take up and you are not treated as guilty. CA Ram would be guilty of if he accepts your offer. No, that's wrong. CA Ram would not be held guilty. So the answer is C. Correct? Though actually B option also right up to full stop. It is permissible to become a member of board of management in primary rural. But in the question urban they tested. So accordingly we went to C. But here B point they said B option is wrong. It is not guilty. You can take up in either urban or rural. In any cooperative bank you can take. But in the ethical standard board recent guidelines, see they are not guidelines by the way. Though I am using the word guidelines, they are recent ethical standard board decisions. In one of the case, a CA would have accepted in an urban cooperative bank a position. The standard board decided and said, since active participation might not be there, yeah, a CA can be taking a position in the urban bank. That doesn't mean only urban is permitted. Are you getting the point? What are ethical standard board decisions? They are based upon the case laws. So in every case, suppose if rural related case comes tomorrow, they will permit it. What if urban they permitted? Why don't they permit rural urban cooperative bank, rural cooperative bank? Obviously permit. Intention of the case law is important. Are you clear? So anyhow, C is permitted. Even rural also it is permitted. In the given case, it is mentioned that CA Lakshman is a practicing CA and is also engaged in equity research advisor. Do you think that Lakshman will be held guilty as per the provisions? Answer is no. Yes, wrong answer. A CA cannot, wrong answer. Yes, wrong answer. The answer is no. He is not treated as guilty. A CA in practice may be an equity research advisor, but he cannot publish detailed reports. Correct, na? As it would amount to other business or occupation. Thus, he does not publish. Here, no, they did not publish any reports. They didn't give any data about it. He will not be held guilty. Thus, if CA Lakshman did not publish any report, then he will not be treated as guilty. If at all he is publishing reports, he is treated as guilty. The answer is A. Are you clear, all of you? So the answers, let us check. So 15th one, A, correct? And 14C, 13B, 12A. 14C, BA, correct. Then 11A and 11A. Let us close that. 11E. The answer is wrong. No, I said 11D only. Yeah, we put D only. Correct only. Sorry, 11D. So now 10th CAA. Okay, CA. Here I told it is wrong answer. Correct? This is actually A. Then 7th one DCB. DCB. Correct? Next 4th one D. 4th one is D. Okay. Then 3rd one B. This one A. BAC. B. C, first one. Here the answer is A. I told you that is wrong answer. Clear? That's it. How much time is spent? 54 minutes. Where we are eligible to take 54 minutes. Intensity, understanding, clarity. If you have, you can do like this. That to remember, I'm explaining. It's not that I'm reading and putting. I can finish in 10 minutes only. All the 15 MCQs. Getting it? Since I'm explaining it to you, it took double the time. That's it. Next. Yes, we'll begin this MTP1 continuation. MCQs we completed. Now we are discussing the descriptive part. Now, Spice Limited is an FMCG having its tea gardens in northeast states of the country and is exclusively dealing in blending, processing, packing and selling of various brands of tea. During the year under audit, the company entered into joint venture for purchasing tea gardens in South Africa and Vietnam. Dharam and Associates are stat auditors of the company for the year 23-24. During the audit team was unable to obtain sufficient appropriate evidence about a single element of the consolidated statements being joint venture investment in Crop Top Limited, representing 89% of the group net assets, having both material and pervasive possible effect on the CFS. Same illustration is what we discussed in ICA. 90% of the substantial item of investment, the company could not get evidence. So the evidence seems to be material and pervasive. So a disclaimer of opinion is required. Actually, there it is adverse opinion, I guess. So, or no, disclaimer only. In ICA illustration, we discussed 705 when we are discussing illustration, 90% disclaimer opinion, same example we discussed. The group investment in so and so Crop Top Limited is carried at 120 crore in the group consolidated balance sheet. The group's investment in Crop Top Limited is okay. 120 crore. Draft the opinion paragraph and basis for opinion paragraph. They are asking the drafting. So here what auditor has to give? Since here it is pervasive. Here it is what? Pervasive, correct? The possible effect of inability to obtain material statement is both material and pervasive. Therefore, stat auditor should issue a disclaimer of opinion. Disclaimer of opinion, how it will start? We were engaged to audit the accompanying financial statements of Spice Limited and its subsidiaries, which comprise the consolidated balance sheet, consolidated P&L, consolidated cash flow for the year then ended, and notes to the consolidated statements including summary of significant accounting policies, herein referred as what? Consolidated financial statements. We do not express an opinion on the accompanying consolidated financials of the group because of significance of the matter described in basis for disclaimer opinion section of our report. We have not been able to obtain sufficient appropriate evidence to provide a basis for an audit opinion on these consolidated financial statements. Even in ICS study material, they don't have proper drafting like this. That's why I use illustrations and the same thing is tested. You see, yes or no? You know, when initially 2 years ago when I started discussing all this, people said, hey, these are all not relevant. That next attempt only drafting question came. And every time drafting question they're asking either on going concern or on the something that all that. Very important. Now you should also give basis for disclaimer. Remember, when we are giving disclaimer of opinion, basis for disclaimer of opinion section will not contain that we have audited financial statements. No, straight away specific reason. That reason and all we will tell why we give disclaimer. The group's investment in joint venture is 120 crore, which represents 90% of the group assets. We were not allowed to access the management and auditors of so and so, subsidiary, including audit documentation of auditors of Crop Top. As a result, we were unable to determine whether any adjustments were necessary in respect of group's proportional share of Crop Top assets that it controls jointly, its proportional share and liabilities for which it jointly responsible, its proportional share of income and expenditure, and its statement of changes in equity. All that we are unable to adjust. We are unable to identify the evidence. That's it. So read this drafting. You read. This is exactly copy pasted from ICA study material. Sorry, ICA pronouncement book illustration. Names alone they changed. There it is 90%. Here it is 89%. Name alone is different. Clear? Next. As an auditor of Growth Limited, you have sent positive confirmation request to 45 creditors of the company in March 2024. All the creditors in the informal sector are small concerns. You choose to send positive confirmation request to all the above parties at their business address stated on the respective bills after discussing the matter with CFO. The CFO is cooperative and does not raise any objection. Responses to the request are received in week time. Your article clerk informs you out of 45, GST registration of 38 concerns have been cancelled. By collecting information from GST portal, he further informs you that there are no fresh registrations pertaining to PANs of these parties. How would you deal with this situation? Straight away illustration. This is in 505. We have seen this illustration in the book itself. In our book it is there. Like I'll just show you. 505, right? 377. Either here or previous year question, somewhere we have seen the same question. Yeah, you see, same question. Illustration number 12. In our book it is there. We send positive confirmation to 30. CFO is cooperative, does not raise objection. GST registrations were cancelled. When there is a doubts about reliability of confirmation given by third party, yes or no, that answer. If the auditor determines that a response to confirmation request is not reliable, the auditor shall evaluate the implications of the assessment, including risk of fraud. In the given case, GST registration of 38 concerns in that question. Getting it? They were cancelled. Further, the businesses were closed. No fresh registrations were obtained. However, auditors sent confirmation which are duly responded. Even the business is closed, even though registrations were cancelled, though dummy businesses, still response got. It raises questions on the reliability. SA 500 indicates when evidence obtained from sources external to the entity, there may be circumstances that affect its reliability. All response carries some risk of interception. Alteration means you might have sent, other party have replied, but somebody would have modified, or other party did not reply. Company itself sent a reply to you, pretending as a third party. Yes or no? Such risk exists regardless of whether the response is obtained in paper form or electronic from other medium. Factors that may indicate doubt about reliability include, like how, when was it received auditor, if at all auditor was received indirectly, like third party did not reply directly to the auditor, indirectly. When I'm getting indirectly the confirmation, I may get a doubt that is this confirmation modified by somebody in the mediator, or appeared not to come originally from the third party, intended third party. Keeping in view the circumstances as described above, there is a risk that response has not came originally from the confirmed party. Unreliable response may indicate risk of fraud risk factor that requires evaluation. That's it. The same answer is what in the that particular this one also they gave. You see, in the instance case, was received indirectly, appear not come from original party. Unreliable response may indicate fraud risk factor that requires evaluation. Clear? CA Shobit is conducting an audit of XYZ Limited for the year 23-24. The company is engaged in the export of handicrafts item to the Europe. The audit is nearing completion in the month of July. However, it became known that CA Shobit that one of the overseas buyer had made a legal claim against the company on 1st June for injury caused to customer of one European buyer due to substandard dyes used. The management of the company had decided to agree to an out-of-court settlement of 4 crore to protect its reputation. The financial statements are silent. Same. This is also there in the illustration 560 in our book. In our book it is there. The ICA illustration only it is. 510, 530, 550 and 560. Or probably not this. In question bank we have seen the same question we have seen, out of court settlement, same question we have seen. Not that. And we'll see the answer here itself. So this is subsequent event, correct? Huh? Yes or no? Here you see you are nearing completion of audit. However, there is a legal claim against the company on 1st June for the injury caused to a customer with respect to dyes used. Where we shipped the goods in August 23, means 23-24 only sale happened. 31st March condition exists. 1st June customer lodged a complaint and 4 crore out of court settlement happened. Condition exists on balance sheet date. Damaged dye we sent, substandard dye, and subsequently court settlement, out of court settlement indicates that subsequent event give rise to confirmation that the condition has turned into reality. So it is an adjusting event requiring adjustment. Yes or no? How CA should proceed? Discuss with the management first, and how management is going to address this issue. If management is ready to amend, conduct procedures on the amendment in the financial statements. You see, this is an example of subsequent event between the date of financials and the date of audit report. It provides evidence of condition that existed as at the date of balance sheet and requires adjustments. The auditor shall request management to provide written representation that all the events occurring up to the date of financial statements for which applicable financial report require adjustment or disclosure have been adjusted or disclosure. CA Shobit should ensure that appropriate adjustments and disclosures are made by management. In the absence of the same, he should consider the impact of the said event and report accordingly. I think here this point is little, this point is little complex. Like many of us, we don't write this point. Under 560, if you remember, I told you this to write a note in 560. What is subsequent event procedure? At last, I made you to write note point. What is the note point? Obtain written representation. Obtain written representation from the management that all the subsequent events up to the date of auditor's report that require adjustment, that require disclosure, were adjusted and were disclosed. Yes or no? I think we discussed it, right? This one, yeah. And that day itself, I made you all to write the notes. Correct? This point I think I discussed. This question itself, I think I discussed. Correct? No, I didn't discuss. Okay, fine. So that's it. In the notes you write. Getting it? In our essay 560, I already told you to write written representation point. In CA Inter, no, we have a separate discussion on this. I think CA Inter we have this question. I remember somewhere this question I read earlier. Next. CAJ is statutory auditor of a branch of a nationalized bank. During the audit, he is focusing upon verification of current accounts and savings account maintained in the branch. Suggest a few procedures. Remember bank audit when I'm explaining savings account, current account opening, KYC norms, non-operative accounts, 2 years. That answer only you should write. I told you 5 points you have to write. This itself can be asked as a question that is asked in MTP 1. Clear? I'm not reading the answer. It's a straight question, bank audit question. Like how do you verify savings accounts and current accounts opened by the customers in the branch bank audit? Next. Aditya, a chartered accountant, was the auditor of Draw Limited during the year 23-24. The investment appeared in the balance sheet is 23 lakh and was the same amount in the last year. Later on, it was found that company's investments were only 76,000, but the value of investment was inflated for the purpose of getting higher bank loan. Don't conclude any answer. Read the last one. Comment with reference to provisions of CA Act and schedules there too. Ethics related question. You have signed financial statements without examining it. Clause number 2 violation. You didn't obtain sufficient appropriate evidence for investments. Clause number 8 violation. It appears that it is a gross negligent. Yes or no? Clause number 7 violation. Correct? So 2, 7, 8. That's it. Are you clear? So can you read the answer later? It's easy only. It's easy only. By the way, clause 2, 7, 8 of part 1 of schedule 2. That's it. CA Kabir, an auditor assigned to conduct a remote audit of Beta Limited. The audit will be conducted virtually using online platform. This is a digital audit question for 4 marks. What is remote audit? What are the points that we need to check in order to ensure that remote audit is effective and secure? We will discuss in the remote audit provisions. In the digital audit, we will be discussing in the class, right? There we will discuss. Clear, easy? That's an easy question. Deepthi & Co. Chartered accountants during the audit of Magma Limited found that certain machinery had been imported for production of new product. Although auditors have applied the concept of materiality to evaluate financials as a whole, they now want to reevaluate the materiality concept for the said transaction involving foreign currency. This is complex question, very complicated. Now, revision of materiality question they are asking 1 point. Now here there is some special transaction that happened. There is a special transaction, that is import of machine. Generally materiality for financial statements as a whole we decide, but there are some circumstances where we may decide materiality for a particular class of transactions. That too, the materiality decided for a particular class of transactions. Generally for whole financials, materiality at a bigger level it will be there. For particular transactions, that much level may not be required. That much materiality level may not be required. So for a particular class of transaction account balance, materiality will be decided at a lesser level than the overall materiality for the financial statements as a whole. In our book also, the answer, this particular reference is given. 320, I'll just see. So here in this, yeah, this one. Write about performance materiality. I think I didn't address this point in our class. If in specific circumstances of the entity, there is one or more particular class of transaction, account balance or disclosures for which misstatement of lesser amounts than the materiality for financials as a whole that could reasonably expected to influence economic decisions of the user taken on the basis of financials, the auditor shall also determine materiality to those particular class of transactions. Generally, while establishing strategy, the auditor shall determine materiality for the financials as a whole. As a whole financials, what is materiality? But in specific circumstances, for one or more particular class of transactions for which misstatements of lesser amount than materiality as a whole could reasonably be expected to influence economic decisions of the users taken on the basis of financial statements, the auditor shall also determine materiality level or levels to be applied to those particular class of transactions. Like generally we decide materiality as whole, but there are some particular class of transactions for which materiality at a lower level may be required. Materiality at a lesser level, that itself is enough to influence. Generally, what is material? Something is material if it is influencing decision making of the user. So for some class of transactions, even if a mistake at a lesser amount could influence the economic decision of the user not necessarily mean shareholder. For example, in MTP1 there is a question here. In MTP1 there is a question in November 2024. What is the question? Deepthi and Co. during the audit of Magma Limited found that certain machinery has been imported for production of new product. So company is manufacturing new product and that too it's an imported item. Although the auditors have applied the concept of materiality for financials as a whole, now they want to reevaluate the materiality concept for the said transaction involving foreign exchange. Since foreign exchange is involved, some regulatory mechanism is involved. Even if a mistake happened at less than materiality as we determined for whole financials, for whole we determine some amount misstatement, some amount if that crossed only material, otherwise it is immaterial. Remember, when you are considering materiality, legal and regulatory framework also should consider. Sometimes here, since foreign exchange is involved, maybe as per some foreign exchange compliance, materiality level that you have chosen, that is very high. In foreign exchange law, as per some foreign exchange related dealings, even if a smaller amount mistake happens, that is also material. As per the foreign exchange remittances, some program. That is the reason for this particular transaction, what company can do, what auditor can do, he can fix a materiality at a lesser level than the materiality that he fixed for financial statements as a whole. Understood? So, materiality, now once again come back to our materiality standard. So there are some specific circumstances where there is one or more particular class of transaction, particular class of account balance, particular disclosure for which misstatements of lesser amount than the financial statements materiality as a whole. Whatever materiality you decided as a whole, lesser value mistake itself is material for certain users. The auditor shall determine materiality level that is to be applied for those transactions accordingly. For those transactions, you should decide materiality accordingly, which means what? Don't take the overall materiality that you fixed for financials. For this, you take a specific performance materiality. We actually call this as what? Specific performance materiality. We can call this as that. Or you can also call it as tolerable misstatement. You can also call this as what? Tolerable. Tolerable misstatement is a materiality level for a specific class of transaction, specific account balance that could influence decision making of the user in that particular class of transaction. That is called as what? Tolerable misstatement. Tolerable misstatement will be increased. I mean, if tolerable misstatement is low, risk is high. If the risk is high, tolerable misstatement. Since foreign exchange, in this MTP1, there is a question. Since it is a foreign exchange dealing, risk is high. Non-compliance risk is high. Therefore, materiality level will be lesser than the whole materiality, overall materiality level. Understood? Now look at the answer what they gave. In the MTP, what they gave for the materiality. So what is the answer? As per 320, materiality and planning and performing an audit, when establishing overall strategy, the auditor shall determine materiality for financial statements as a whole. First point in that our notes. If in specific circumstance of the entity, there is one or more particular class of transaction, account balance or disclosure for which misstatement of lesser amount than the materiality for financials as a whole could reasonably be expected to influence the economic decisions of the user taken on the basis of financial statements. The auditor shall also determine materiality level or levels to be applied to those class of transactions, accounts, or disclosures. Correct? So now accordingly, now tell me, overall materiality you fixed. Now for this class of transactions, since risk is high, foreign exchange is involved, you need to decide a separate materiality level. Therefore, now tell me, is there a revision? Is there a requirement for revision of materiality? Yes or no? Therefore, the auditor shall revise materiality for financial statements as a whole, if applicable, materiality level for particular class of transaction or disclosure in the event of becoming aware of information during the audit that would have caused the auditor to have determined a different amount initially. Initially, you don't know that there is a foreign exchange import, all that. So you determine materiality for financial statement as a whole, the same material you thought of applying to this transaction. But after you came to know that there is an import of machinery, that too in foreign exchange, now you decided that initially, if at all this information I know, I would have not decided that material. So now you have to do what? Revision of the materiality. If auditor concludes a lower materiality for the same, he shall determine whether it is necessary to revise performance materiality and whether nature timing further audit remaining appropriate. Same. See whether since materiality revised, nature timing extent of audit procedures might also affect. In the given case, Deepthi & Co. as an auditor has applied the concept of materiality for the financials as a whole, but they want to reevaluate materiality concept on the basis of additional information based on import of import of machinery for production of new product, which draw attention to particular aspect of a company business. Thus, Deepthi & Co. can re-evaluate the materiality concept after considering necessary such revision. Understood? Are you clear? What I will do is this MTP1, this particular materiality discussion, this question, this analysis, once again, I will crop this and I will keep this in materiality related discussion, whatever we have done in the class, as an extension video to it. For example, suppose if that video, probably that video might be some 17 or 18 in the standards chapter, or 20, 21, I don't know exactly. So that numbering, that next number immediate 21 or 21 I'll put, 22 or 22 I'll put. Huh? Same question, huh? Question tappa irka. I think now we have got, okay, we discussed question, okay, question we discussed, import of machinery, same, huh? Okay, whatever it is, question was not there, I think we discussed, okay, fine. But anyhow, once again we will keep it, let it be as part of question bank, that, and let this be as an extension to conceptual discussion. Okay, that's it. Okay, 320 discussion over. I mean, I just concluded. Next. I think people will not confuse, right? Yeah. No, I will crop only that correct element and then add that video there. And of course, as a part of MTP discussion also, this will be there. Singh Limited is a company registered under Companies Act. The company is engaged in business of loans and advances, acquisition of shares and debentures, bonds, and issued by government or local authority. For the year of 31st March 2024, following are the some extracts. Paid up capital 50 crore, non-current assets, current assets, these are financial assets, correct? Total assets, financial assets divided by total assets. First of all, directors intend to apply registration to NBFC. Advice, are they eligible for registration? If they are eligible, they can apply. Eligibility we will see. Total financial assets are how much? 373.74. Yes or no? Divided by 620, more than 50%, correct? Intangible assets not considered. Profit 7.25. Income from interest and dividend 68. Okay, 68 divided by gross income is how much? 1 point. So approximately more than 50%. If total income from financial assets is more than 50% of the gross income of the NBFC, then income criteria is satisfied, asset criteria both are satisfied in this company. Therefore, the company is eligible for registering as an NBFC. Accordingly, the board of directors have to apply for registration to RBI for NBFC. Over. Easy. Next. CA Shubh, a chartered accountant in practice specializing in the field of IS audit. He is considered to be one of the expert in the field because of the command over subject. JEDEX Limited, a company engaged in rendering management consultancy, offered to him appointment as a managing director. CA Shubh accepted the position of managing director without obtaining permission of the institute. One of his friends, Varun, informed him that now he cannot retain full-time COP, thus cannot do attestation function and train articles. Comment with reference to provisions of CA Act. Remember, it's a management consultancy company. If a company which is engaged in management consultancy and other services and got approval from the ICA regarding the name of it and the operations, a CA in practice can be a managing director and whole-time director in that consultancy company. Suppose if this company does not have the approval, then it is deemed to be guilty. If it already has an approval from ICA, it is deemed to be not guilty. Are you clear? So you need to write a corporate form of practice. A CS in practice can become a managing director or whole-time director in a company which is engaged in exclusively management consultancy and other services. The list of management and consultancy and other services are defined under 2 subsection 22 subsection is there. Okay, defined under CA Act. Okay, so defined under CA Act, and accordingly in the given case, CA Shubh has become a managing director in ZX Limited, which is a management consultancy company. If at all the ICI, if at all ZX Limited has got the approval of the ICI, getting it as a management consultancy in its records, then Shubh can accept the appointment as a managing director and he is not treated as guilty. Alternative view, if at all ZX Limited is not an approved management consultancy and other services organization in the ICA database, then the CA Shubh appointment as a managing director is treated as guilty of professional misconduct under clause number 11, part number 1, schedule number 1. That's it. Clear? You read the answer. Next. Discuss reporting responsibilities of stat auditor under CARO 2020. Discuss the reporting responsibilities of stat auditor. In the financial year 23-24, Candy Limited decided to upgrade its registered office. Candy Limited upgrade. Okay. In the 23-24, the company decided to upgrade its registered office located at a prime spot in Bangalore. So they want to upgrade their corporate office. As a part of this upgrade, company sought up to acquire an adjacent plot of land owned by Siddhant, who is a director of the Candy Limited. Okay. So they want to acquire the plot which is adjacent to the same company. Initially hesitant to sell, Siddhant was persuaded, means convinced, to transfer his property to the company in exchange of a large plot owned by the company. This plot located on nearby is the double the size of Siddharth land. Okay, company took the director's land and director gave his land to the company. Non-cash transaction. Yes or no? Non-cash transaction, whether it is done as per the provisions of section 192, we need to check. Moreover, director is a related party. See whether related party transactions are approved as per 177, 188. Further, under CARO related party, you should see whether related party transactions are properly accounted and disclosed in the financials. So 2 clauses. One is clause number 13, a related party. 13, and non-cash transactions 15. 15, correct. So non-cash transaction 15. Whether these 2 clauses auditor has to report under these 2 clauses. Satisfied with the exchange, Siddhant agreed to transfer the property and exchange was formalized with a deed with authorized representative. The registration was completed on December 31st. What they are asking, discuss the reporting requirements. The auditor has to report under clause number 15, clause number 13, because both are dealing, one is dealing with non-cash transaction and moreover it's a related party, so both have to be reported. Correct? Generally, clause number 13 reference students will forget. Remember, director is a related party. Whenever related party comes, clause number 13 also applies by default. Remember, on 15th May, a TDS survey was carried out in premises of SSO Limited in accordance with the provisions of the income tax law. Survey team pointed out certain lapses regarding non-deduction of TDS and subsequently Deputy Commissioner raised a demand of 25 lakhs for the company, treating it as assessing default. The company did not deposit the demand raised and filed an appeal against the company under e-appeal schemes with the Joint Commissioner. What is the disclosure requirement? 7B, clause number 7B, disputed dues. The forum where the dispute is pending and the amount involved in the dispute, the period for which the dispute pertains to. The auditor has to disclose it under clause number 7, particular clause, subclause B. That's it. Clear? One of the independent directors sought information regarding appointment of inter-auditors for the following group companies in accordance with the Companies Act. Director, public company, public company, public company. Oh, you see, nature unlisted private. Question itself is wrong. How come it's a limited company? How come it's a private? Correct? If you remember, private company is only having 2 criteria. 200 crore turnover criteria, 100 crore borrowing criteria. Both are not satisfied. Yes or no? Whereas public limited company, I think what is the criteria they have? It's a straight question. You are required to evaluate requirements regarding appointment. Listed company compulsory irrespective of turnover. Yes or no? Whereas unlisted company capital criteria I think 50 crore. Correct? Since capital criteria is more than 50, company failed to comply. So unlisted public company, they have to have internal auditor. Whereas private company, capital criteria is not there. Only turnover criteria, outstanding loan criteria. Deposits is not applicable, first of all. Yes or no? Deposit is not applicable. Since both are not satisfied, internal audit does not apply. Just check out the answer. Okay, I just guessed and then told you, just check. It's a monitor limits question. Okay? Much of interpretation is not there in this. Which private limited requested CA Angad, a practicing CA, to digitally sign the form relating to resignation of Mr. Ravi, one of the director, along with the copy of resignation letter to be uploaded on the website of register. The signature of Ravi was simply copied and pasted by another director, CA Angad, okay, without verifying the genuineness of the resignation letter, digitally signed the form and uploaded on the registrar. Gross negligence. Clause number 7. Straight away, clause number 7. That's it. Next, SPS Associates, CAs, are statutory auditors of Greg Limited for the last 2 years. Greg Limited is engaged in the manufacturing marketing of pharma goods in India. During the 2024, the company has diversified and commenced software solutions e-commerce in India as well as certain African countries. SPS Associates, while carrying out the audit, noticed that the company expanded its operation into new segment. SPS Associate does not possess necessary expertise. Discuss the issues. Withdraw from the engagement, right? The firm should provide policies and procedures for withdrawal in this case. If after accepting the engagement, here already is auditors and existing auditor, now suddenly company start a new line of business where auditor felt they are not competent. Yes or no? While accepting and continuing relationship of a client, you need to consider whether compliance with legal ethical requirements, competence of the team including capability, availability of resources, integrity of the client, these are all should be considered. If after accepting the engagement, if auditor came to know that the client is having some different line of business which auditor is not competent of, auditor can inform the same to the management, auditor can inform the same to the respective legal and regulatory authorities, look at the legal professional responsibilities he has and see whether withdrawal is permitted. If withdrawal is permitted, whether the firm provided policies and procedures on withdrawal, because you need to withdraw in a certain manner and adhere to all of this. SQC question this is. Understood? This is SQC. We solved this. We solved the similar question in our book also. Somewhere in the question bank or in our illustrations in the SQC, somewhere we solved this. Similar question we did. Understood? Please read the answers later. Mr. H was appointed as a stat auditor of MLL Limited, a listed company which has 3 subsidiaries, MNL, and also 15 branches across India. The auditors were duly appointed for all subsidiaries and branches. What should be the consideration of CH regarding determination of materiality during the audit of consolidation? Remember, in consolidation I showed you this question. When we are discussing in group audit, I showed you what are the materiality determination in group audit. How he should deal in his report if there are observations made by component auditor. Abba, 2 questions they asked. 1, materiality determination related point. 2, how you should deal if there are modifications in the other auditor's report. If modifications are there in the other auditor report and other components are audited by other than the principal auditor, last question inside that, what are the reporting requirements? That point you should write. If components are audited by other auditors, that point you should write. If there is a modification, what you should see, if whether that modification reason is material and relevant at the group level, and accordingly you will also see whether modification is required or not. Now you should write 2 answers here. One is materiality determination. For a consolidated financials, how will you decide materiality? 4 points were there. That you need to write. And modified opinion related in the component order, but that point you should write. Understood? During the audit of Indo Limited, CA Harish observed that processing of accounting data was given to third party on account of certain considerations. When you are watching the video, please pause the video, read the question correspondingly, answer, then only continue watching the continuation question. During the audit of Indo Limited, CA Harish observed that processing of accounting data was given to third party on account of certain consideration like cost reduction, own computer working to full capacity. Indo Limited used a service organization to record transaction and process related data. What factors the auditor should consider regarding the nature and extent of activities undertaken by service organization so as to determine whether those activities are relevant? In our service organization, some 4th question, I think 3rd or 4th question. Like remember, nature of the services provided by service organization, relationship between them, extent of involvement, like that we have seen, yes or no, relationship between them, all that, materiality of the transaction processed, 4 points will be there. Discuss with reference to relevant standards on auditing. We have direct question on that in our book. Which question? Fourth question, correct. 4 points will be the side headings, correct? What is the nature of the services provided by service organization? Materiality of the transaction process. Third one, degree of interaction involved, relationship between the user entity and service organization. That one, clear? 4 marks question. That time itself I told a case study kind of question can come like on that. They'll give you one scenario, they'll give you 4 marks question. I told, yeah. You are engaged by Messrs. Viva Limited to examine and report on prospective information which the management of the company has prepared for presentation at an investor meet program organized by state government to attract investment. The company it's a vision document described various plans and proposals of the company with the projected financial goals and means to achieve the same, various benefits accruing to the economic developments of the state. What important matters will be considered by you while determining nature, timing, extent of examination procedures to be applied? Okay, this is regarding direct prospective financial information. What important matters will be considered while determining nature, timing, extent of examination procedures to be applied in the review of the same? What you are reviewing? Prospective financial information. Yes or no? It's a straight question in our book. You can see PFI 3400, it is there. Okay, you can check it later. Shri Limited, a listed company having its registered office at Mumbai, is engaged in manufacturing various types of yarn to be supplied to textile mills. The company has installed pollution control equipment for processing the pollution so that before discharge of the effluent outside the factory, the level of pollution is kept below prescribed standard. The company managed to get pollution certificate by unfair means, while still there continues to be breach of pollution law in the matter of discharging pollution. The amount of 18 lakhs has been incurred for arranging clearance certificate, and the amount incurred unlawfully has been booked as pollution expenditure. Some expenditure, they paid some bribe and they booked it as some expenditure. Simple. Until now, the matter had not reached to the governance. Top management don't know, and the director of finance, who is a chartered accountant, came to know these matters on the review of major expenditure incurred during the period. Comment the action or response expected to be director of finance, referring to NOCLAR and Code of Ethics. Is this a listed company? Yeah, it's a listed company. Which means, now what is the NOCLAR provision says? Listed company, you need to see under the respective regulatory law, if there is a requirement of reporting of non-compliance on the top management of the listed entity, senior professional accountant. If a senior professional accountant on the listed entity has a duty under some law and regulation that to report a non-compliance, if there is a duty, report it. If there is no duty, you can keep quiet. Simple logic. Correct? So you see, they will clearly give the discussion. Vicky is a financial analyst working for a large company that is considering the acquisition of a mid-sized manufacturing company. The initial financial statements provided by target company appear to be in order, showing profits on solid asset base. However, his team concerned about potential risks that may not be immediately visible. Guide Vicky on specific aspects should be focused regarding due diligence to ensure that there are no hidden liabilities. Remember, in the class also we discussed what points you should see. I mean, what points you will see that there are no hidden liabilities. Ensure that there are no, what are hidden, no, ensuring no hidden liabilities. Some 5 points you need to read. We discussed directly from the ICA book. Next, CAY is the auditor of STEC Limited, a company that recently faced material misstatement in financial records, leading to an adverse opinion on the audited statements. Now the management of the company has prepared summary financial statements derived from audited financials and requested CAY to express opinion on the summary. What additional point you should consider? Remember, straight question, I told you 3 points or 4 points will be there. You say that these financials are taken from audited financials, and all the audited financials adverse opinion is expressed, and mention that adverse opinion and the basis for adverse opinion, and because of adverse opinion on the audited finances, it is inappropriate for you to give opinion on the summary financial statements. That point, 3 points you should write. Same answer. We have seen in our book. Straight question can be asked, I told. Clear. That's it. MTP1 is completed. Confident all of you? That's it. You please have to read all the answers, because at so many cases I have not read the answer because they're straight questions. Okay, please read the answer carefully, thoroughly. That's it. But don't judge your performance on MTP right now. Once after you do a thorough revision, proper revision, intense revision, then you come back and read the MTP, you will get more confidence. Hardly 1 or 2 questions are only different. Materiality question was something different, and That's it. I feel only that alone is something different in this, not anything else. Clear? Yes.